Welcome back to the Bitcoin Traveler. Today, we're delving into insights from Dan Morehead, founder and CEO of Pantera Capital, on the debasement of traditional currencies and the expansive growth potential of the cryptocurrency market. Before we dive in, don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated with our latest content. Share your thoughts in the comments below. Do you believe cryptocurrencies are the answer to currency debasement?
So I really am worried, as an American citizen, like how's our government going to get out of this? Because they have an enormous amount of debt. They're piling on 6% of GDP every year. That's a huge new amount of debt. Rates are heading high. They're much higher than they used to be, heading higher. And most countries, when faced with that, inflate their way out of it. And inflating your way out by printing more money is really the common way people get out of this. And so I think it's going to happen. And that's why I think you're right that when you talk about the value of scarce assets when priced in paper money terms keeps going up, right? Gold's at a record high, stocks are at record high, real estate's record high, Bitcoin's record high. Maybe they're not moving. It's the price of paper money that's going down, right?
In a recent discussion, Dan Morehead highlighted concerns about the ongoing debasement of fiat currencies. He emphasized that traditional paper money lacks intrinsic value and is subject to continuous devaluation due to excessive monetary policies. This persistent erosion of purchasing power has led many to seek alternatives that can preserve value over time. Morehead argues that cryptocurrencies, particularly Bitcoin, offer a compelling solution to this problem. Unlike fiat currencies, Bitcoin has a fixed supply cap of 21 million coins, making it resistant to inflationary pressures. This scarcity, combined with its decentralized nature, positions Bitcoin as a potential hedge against currency debasement.
Why be in something is being debased, right? Why not be in something that has at least kept up with inflation, like a bunch of those things you just mentioned, like gold and S&P? Or, hey, why not get into something? Our Bitcoin fund's 11 years old. It has a 90% compound annual growth rate, right? It almost doubles every year. That's pretty good compared to -8, right? Like plus 90 versus -8. So, and again, governments are really good at debasing currencies. Unfortunately, I think they're speeding up, like all the stuff that you're talking about with deficits and paying more in interest than defense, speeding up. And so, again, that's why everyone's going to crypto. A couple 100 million people are using crypto now. 4 billion people have a smartphone, and that's all you need to operate crypto. So, seems like 1 billion people will be using crypto in the next, say, 3-4 years.
And that's my mental model of all of this is we're building a new economy. It's going to go from 3 trillion today to 100 trillion maybe within 10 years. And that is going to be the fastest growing economy of all time, obviously, the fastest accrual of wealth. But it acts like an economy too. It has GDP. There's all sorts of things. And it makes total sense when you say, well, they can look at this as a frontier economy that is highly investable.
Yeah, it is. And in particular, Bitcoin trades 40 billion a day or whatever. Like you could put an enormous amount of assets into it. So again, that's why I think it's a great space. Because if you zoom all the way back, when we were at Goldman, they did the GSCI, and now everybody thinks of commodities as an asset class, of course. And then in the 90s, we were doing EM together, and everybody thinks of EM as an asset class. I think it's the same thing here. In 10 years, everybody's going to think of blockchain as an asset class. They're all going to have an allocation. And with most people starting literally at zero allocation today, and, they put whatever 600 basis points, whatever the ultimate number is going to be in, it's going to drive value up.
Currently, the total market capitalization of cryptocurrencies stands at approximately $3 trillion. Morehead envisions a future where this figure could expand dramatically, potentially reaching $100 trillion as adoption increases and more assets migrate onto blockchain platforms. He believes that as the global financial system continues to recognize the benefits of decentralized finance, the crypto market will experience exponential growth.
People often ask, like what inning we're in. We're really in the first inning still. Most funds have zero exposure. Most people, have nothing really meaningful in the space. So we're still, I think there's decades more to go. And yeah, maybe I can't keep doing this for decades, but like it's fun to do it, to kind of get it to escape velocity, right?
Yeah, and as I said, how I think about it, and when we talk about it in our fund of funds, it's really we're 3% of the journey. If it's going to 100 trillion, and it's only three, you're like, when people say, "Is it too late?" You're like, it's only 3% of the way there,
Yeah.
and therefore just relax. It'll all play out over time.
In summary, Dan Morehead's perspective underscores the potential of cryptocurrencies to serve as a safeguard against the debasement of traditional currencies, with the possibility of substantial market growth in the coming years. That's all for today's episode of the Bitcoin Traveler. Do you see cryptocurrencies as a viable hedge against currency debasement? Let us know your thoughts in the comments below. Remember to like, subscribe, and hit the notification bell to stay updated with our latest content. Until next time, stay informed and navigate the crypto seas wisely.